We have with us Mr. Bruce Norris. Now, Bruce was not initially scheduled to be at this event, at the live event, because remember, this event was scheduled to be live. We now changed the webinar. Bruce was actually scheduled to be on vacation, but with a turn of events, could not go on vacation. And when I called him and said we were putting together this emergency webinar, Bruce was nice enough to donate his time. So we're actually visiting Bruce via Skype. And Bruce has, over the last 4 decades, primarily been a real estate investor, has been involved in several thousand real estate transactions, and has been very successful because he has the keen ability to take a look at charts and graphs and to determine whether or not the market is going to tick up, down, when you should be in and out. And so we're looking for his insight, his guidance, get his thoughts on the recent event. So Bruce, thank you for being with us, sir.
Well, thank you. If we've ever been in uncharted territory, this bit.
The first question from the live audience is, where are we headed? You know, what should people do in this situation? You know, of course, you know, our client base are landlords. They're concerned that their tenant base may be without a paycheck in a couple, 2-3 weeks here. Does the rent show up? What do we do to move forward?
Well, I'd say one thing, you know, first of all, yes, you're going to have a lot of people lose their jobs to no fault of their own. And a lot of us are much more wealthy than those people that are in that. You're not going to be able to evict them anyway. And if these people have been good tenants, they'll be good tenants again. So this is an unusual circumstance where we have to be pretty patient about them paying whatever they can. I'm in the same boat. I've already thought about that. And I have a feeling, and there's some government programs that are being talked about aggressively giving people money, and not a little money. The one that I read just last night, they were talking about $2,000 a piece for each adult, $1,000 for each child. So I think that they're going to get really serious about trying to prevent that Great Depression, because this is not going to be a Great Depression that takes 10 years. This will be a depression statistically that could get there in 3 to 6 months, and they're trying to prevent that.
Now, at our previous, well, let's go back just as late as the fall. In the fall, you thought that there could be a seismic event. Again, of course, no one thought it would be a virus, but nonetheless, this is a systemic event. I said seismic, systemic event. What brought you to that? What brought you to that conclusion 2 weeks ago? What brought you to the conclusion that the stock market would hit 20,000? What indicators are you looking at that you're able to hit these things right on the head?
You know, those aren't charts. Those are understanding people's reactions. So we have a nature to overreact, and we have an attachment to news every second. So it's pretty easy to get worked up over something, and pretty easy to push the sell button, and maybe not so easy to sell real estate, that type of thing. So in a way, we're kind of blessed in that we have a pretty stable asset that we don't push a button and get rid of it within 15 seconds. So, but when I was working out with my buddy, and he was leaving on a vacation, which was a 14-day vacation that lasted 4 days before he barely got in the country. Yeah, we were working out. The stock market was around 28,000. And I said, I bet we see 20 before we see 30. And he was like, yeah, right. And it had nothing to do with me knowing stocks. It had me knowing people.
And, you know, you've been through several downturns now. What makes this one different? I know we're just on the onset of it, but how is this one different?
Yeah, this is very different. In our lifetime, we've not had a closing of what we are going through and what we're about to go through. You know, in the next 30 days, you're going to be at home. You probably won't be going to a hotel, a restaurant, a baseball game. Vegas is closed, on and on. We're gonna basically need to stop our society in its tracks for 30 days plus, and to prevent the spread of this. We've not had this before. John Malden, another guy I respect, he said, "This isn't fighting a virus, this is war." Well, I have a feeling, and I know you would agree with this, that this will bring out the best of us, not the worst. We are capable of solving this, and we are, in fact, turning loose a lot of tools. They have things at war that they can enact for very quick production of things, and that's where we're at. So this is unlike anything we've had. If you own real estate apartments, you're good. Most of us are, I understand this. This is called a feigned crisis. Me and a friend were going to lunch one day. He owned 50 free and clear houses, and his mood was being ruined because somebody was late on one rental house for 10 days. And I looked at him. I said, buddy, you are having a feigned crisis because there's nothing wrong in your life that it should entail having that kind of a mood. Most of us have been very blessed. And you know what? We need to think about being on the other side of that coin where you're 30 days away from being homeless with a family.
Yeah. And it's scary because even myself, I went to the supermarket yesterday. I got there probably 20, 30 minutes early. There already was a line 25 people deep. And as you go down the aisles, there's very little canned goods, bread, some staples. And like you mentioned, many of us are on a different socioeconomic level, obviously, than our tenants. And so I think we need to be cognizant of helping those that we can, because if you back a tiger into the corner, in other words, we know that the average American has less than $1,500 in savings. And so if you're that individual, supply of money is getting low, you go to the store, there's not much to be had, you're the tiger in the corner, what do you do?
Yeah, you got people that are, on the edge month to month. Let's be more kind than aggressive, that's for sure.
Now, obviously, on the other side of these type of economic calamities, there's opportunity. Before we get to opportunities, if you were an investor who you knew in the next, say, a year to 2 years, you were going to be selling anyhow, you hope that you could just eke out a little bit more in equity. If they came to you for advice, now these are individuals who are going to sell either way. Do they sell today because you don't think that the same price would be had in 2 years, or do you think they hold in and to sell would be a knee-jerk reaction?
Yeah, I wouldn't be a seller during this time. This is going to be a very severe time for the next 60 days. We're not going to have life as we know it. To try to put anything up for sale right now, the buyer is also kind of frozen. They're going to be in a place that there's going to be fear. I don't see where you'd benefit selling in the next 60 to 90 days. That would make no sense. Now, going out further, when we get past this, I have a feeling that things will return to normal, and the one asset class that wouldn't have been hurt as much would be real estate. You're not going to have a bunch of foreclosures enter the market in the time frame of this. We may have a statistical depression if you're a stock market investor. Let's say that entails going down 60% and you're at 35 right now. But you know what? It isn't going to take 2 years, and it's probably going to come back once we have an economy that gets on its feet again. But as far as selling real estate inside of this time frame, I would not attempt to do that.
And are you like the optimistics that you believe if and when this recovery kicks in, it's going to be a V-shaped recovery, and if anything, we could even exceed the highs that we just encountered?
No, I do not feel it'll be a V-shaped recovery, because this is taken out things that won't be. You can't get the guy just in Hawaii missed $5,000 of rent and it's gone. I'm not paying 2 weeks for one. I'm paid for one and I'm staying in November, but I already prepaid it. So he's missing a chunk of his revenue. There's going to be jobs that are lost for a considerable length of time. That spending is gone. So no, I don't think we have a V-shaped. I think we have something much slower. but we'll come back.
Now, you know, here in a few minutes, I'm going to walk our audience through some of the growth projects that I have completed and those that I'm in the middle of which you were the hard money, your company, I should say, lent us the money and private money. And we bought smart. I can weather a storm for a little while, so your money's protected, Bruce. But on that side of the coin, being the lender, how do you see things shaping up?
Well, that's a great question because we just had a part of what I was doing was talking to our investor base. They are homeowners or they're investors or trustees. I expect the same patience and consideration out of the money side if there was something that occurred that prevented a payment. I really think it's a good time to sit there and go realize this is not going to be I don't think this is going to be a 2-year event. I sure as heck hope not. This is going to hit hard and quick. We're going to have a really tough 30 to 60 days. The people, most of our business is flippers. So it's known to be vacant the whole time. So that part, that's not a surprise. What might be a surprise is the revenue they typically get from rents might go down, or the flipping that they had already in escrow didn't close. All those things can happen. Chris, I think it really helps that we really deal with decent people, to be honest with you, borrower side and people with the money side. And I'll be in the middle of that going, hey guys, let's cooperate with each other because we're all in this together. We really are. So you don't want to foreclose. First of all, you can't foreclose, so forget that. And he's got to wait till something closes or he refis to get some liquidity. How about we just work it out? I mean, that's where I'm going to be in the middle. And 2008, I did that a lot. If you were 30 days for the first time in your life, I called and just said, what's up? Let's help. Let's do it.
Sure. And if, let's say, you and I weren't going to be, or you and I wouldn't have the opportunity to talk over the next 90 days, of course we will. I'll be staying close to you to see your thoughts as things transpire. But if we couldn't have another conversation for 90 days, what advice would you give those individuals that are holding multifamily properties? Potentially some of the tenants may lose jobs. Maybe there is some government aid, but it doesn't come as quick as we need. What would be, I mean, you've been very successful at this. What would be your advice to them for the next 3 months?
I guess I would say keep your priorities in order. Be thankful you can still hug your family members and that you have the substance to last through this. And be respectful of the people that are your tenants and that they have family members that need to survive too. This is no joke. John Malden is right. This is war. So we need to, instead of thinking about our assets and our cash flow, I guess we need to think about the safety of all the people that help us get here.
And to correct me if I'm wrong, but to summarize, you believe we're going to get hit hard, but it's going to be brief and swift, but there should be another recovery, or there will be a recovery on the other side of this, and it won't take as long as some people are suggesting, like with the Great Depression, or say even the 2008 financial collapse.
Well, see, the 2008 financial collapse was caused by a glut of foreclosures that entered the market at something like 80% of the inventory for sale. Well, you don't have that loan base. That isn't going to happen. Real estate's going to be the least affected. You're going to have a bond world for business bonds have a big problem, but the Fed's going to underwrite that and buy them. So this is going to be just what's going to be hard is you're going to be at home. I mean, that's the truth. If we're not thinking that way, we're kidding ourselves. For the next 60 days, we're by and large, we're going to be isolating ourselves so we don't pass it on and we don't get it. So just think about what's not going to occur. That's an astonishing thing. That basically business is just not going to be conducted like normal. So, and for a good reason. We're trying to save our lives. That's a odd way to feel, but I finally sort of get it. That's how serious it is. We don't want to be Italy squared. We really don't.
Well, thank you, Bruce. Thank you for your time. I know our audience greatly appreciates that you took a moment to join us. and we'll be talking soon.
Okay, take care, you guys.
Who's up next is Mr. Gil Figueroa. Gil, for the last 3 decades, has been involved in the capital markets. And I didn't want to trout somebody out here from Wells Fargo or one of these financial institutions, nothing against them, but just to read you a rate sheet. No one needs to be told that rates have gone down over the last week. But Gil, being involved in the stock market, bond market, every capital market, and who, interestingly enough, at our last 3 educational events was able to pinpoint small trajectories in rates going up and rates going down, is here to share with us what does he see now, what do you need to be cognizant of, and I would listen closely because, again, in 2 years running straight, he's been accurate every time. So I welcome Mr. Gil Figueroa.
Hello, everyone, and thank you for joining us. Today we're going to be talking about the future direction of interest rates, the market, and what we need to do right now as far as a game plan in this environment. I've been in the business, and I'll reference it 30 years, but in essence, Desert Storm. So I've been through 3 different markets, 3 different collapses of markets, and 3 different recoveries. The one thing I want to pinpoint today is this is not a financial disaster. This is a natural disaster. So it is different, and it is different as the way it can play out. With that being said, we've done every type of loan the market has offered, from SBA to residential to multifamily and commercial. Commercial is our forte, and we've done over 6,000 fundings, and we expect to do 6,000 more. Currently, we have rates as low as 3% on a 10-year program. The rates have substantially dropped, as you know. The treasuries are moving the right way. There is some friction in the future, and we'll discuss that later in the conversation. This chart shows where we forecasted the high of interest rates to be much lower. That was done in September of 2018. As everyone forecasted rates to shoot up, our forecast was rates to come down. As you see in the chart, as the yield drives up, the rates are actually lower. So we charted this back in 18. Now, this is us today. This chart was done 3 days ago. And as you can see, the 10-year Treasury has soared straight up, which means rates have come down. If you can see, it did hit a lateral point, a high, and now it is moving the opposite direction. Now, what can this tell us? In October of 2019, I mentioned we'd have a blip in the screen as far as rates going higher. It was just a blip, and by December and early January, I discussed with Chris in one of his webinars that the rates are going lower. We had a diagonal formation, and we could see that the rates were going to go much lower. This was forecasted in January of this year. And exactly, it played out exactly with perfect symmetry. As you can see in the arrows, our market has perfect symmetry and moved up to a top. Where are we now? The market is not being able to break that threshold of lower rates. What this tells us is rates are going to be stabilized. Now, the bond market has the greatest traders, the greatest forecasters in the market. The bond market's actually telling us this is a short-term blip on the screen. That's what it's telling us, and it's recovering. It's recovering to more normal rates as far as they're concerned. Our expectations are rates to go right back where they were. So if we had 3% rates now, we expect rates to come back up to 3.5, 3.6. We expect the market to stabilize. With that being said, the stock market usually stays right behind our bond market. So we expect a bounce in the stock market. When and how much, we really couldn't say. In today's market, the most crucial thing that we have to look at is what is your position in cash and liquidity. Over the last 3 seminars, we've been basically stomping our feet in regards to liquidity and getting cash and having enough cash reserves to be able to capitalize on any opportunities in the future. Never more has that been a greater need for that. We've been talking about it. We've been talking about what the federal funds mean to us, what inflation means. What are they doing to stimulate inflation and so forth? Warren Buffett had a position in cash of $122 billion in cash. He was ready. He's ready to take action on great trades in the future. There's a reason he was in cash, and there's a reason he's going to capitalize when the right position comes and timing. Bonds have fallen off, not acting like a safe haven. Why? There's many theories to this. One of ours is the market is reacting to an oversold position, and we feel that stocks will come back eventually. This is a great time to do cash out refis. Reposition yourself where you have enough leverage to move forward on different opportunities. Today we have 5 of the greatest minds in this marketplace, and we're an open forum to help you make these type of decisions. Where are we now? As far as the market's concerned, we have to watch what markets are pulling out of this quickly. We're noticing Walmart's pulling out. We're noticing FedEx is pulling out. Now, FedEx is pulling out because of actual Chinese rebounding in their stock market and use of FedEx. TomTom, which diagnoses traffic in Shanghai, is showing that they're back to 70% levels as far as traffic concerned. So their market is recovering. They only had a $76 billion stimulus. So their stimulus was very minimal compared to ours. Okay? We've had $1 trillion in capital markets as far as commercial paper stimulus as support. We're getting $1 trillion in stimulus package. The SBA has opened their doors for emergency funding, stimulus, and so forth. This market is perfectly positioned to make a big rebound. Just by one simple news event as a vaccine can change the whole atmosphere of this marketplace. So be aware that this market is prepared to turn around at any moment. You must have an investment game plan. Unlike ever before, you have to have enough reserves, you have to have enough capital to take advantage of this market. You also have to have enough reserves to substantiate the storm, so to speak. This is a time where a plan is most needed. You have the right professionals here to discuss your plan, to execute your plan, and to move forward. With that being said, experience is invaluable. We've done every type of loan. We have the right lender for every situation, whether it be the lowest refi rate, the lowest purchase rate, the lowest cash out rate, the lender who's more apt in funding deferred maintenance or C properties or even C grade credit issues. So we have the right lender for each situation. So there is not a one-stop lender, but there is a one-stop mortgage broker, and that's us. I can say, moving forward, set a game plan, get liquid, stay in peace, take this time to acknowledge your loved ones, and get closer to God. Thank you.